You are listening to chartingwealth.com for Thursday, the 21st of April, 2016. We always start with IYY, which is a representative of the total market. It's an ETF. It represents everything going on in the stock market. What do we see happening? Well, we see a three-candle, 2-day candle, three of them trend, which represents, of course, 6 days of upward movement. We continue to see the MACD diverging from the signal line, even though they are danger close. They still continue to diverge and the market continues to go up, so we continue to call it up. That is what it's doing. It was up overall today, 0.14%. Not a lot of movement, but still up movement. We have the derivative oscillator continuing to gain energy. It dropped over on the 12th. The 2-day candle on the 12th looked like it was going to go into the negative. It did not. In fact, the down movement stopped on the 12th and then moved up on the 14th, 18th, and 20th. We even had further up movement throughout the course of the 2-day candle that it settled back down below. So we have wicks on top of all three of the last 2-day candles that we've seen for that 6 days. Now, if we revert back to what happened intraday on the 20th, what do we see going on? Market was up in the morning and up in the afternoon. Our derivative oscillator is in the positive. It lost a little energy in the afternoon, gained some energy over the prior day in the morning. We had a crossover on our 4-day chart going up back on the 12th. Those of you who jumped into the market have seen very nice movement up. The high back on the 13th was 103.52, the low 102.28, and of course, where did the market hit during the course of the last 2-day candle? It was a high of 105.18 and a low of 104.55. So we like to see that kind of movement. Now, let's go over to we're going to go back to our 2-day chart. Then we're going to take a glance at what's happening with the S&P 500 as represented by SPY, the Spiders S&P 500 Trust Series Exchange Traded Fund. We also have it going up 3 2-day candles for a total of 6 days of upward movement. Nice, good trend line that we have there in blue on our chart. For those of you who are watching the chart, those listening, I'll tell you what we're seeing. We're seeing the same divergence between the signal line and the MACD. Derivative oscillators gaining energy since it hit its low back on the 12th of April. We have the S&P 500 not up as much as the total market. It was up 0.10% for the day. If we look intraday on the 4-hour chart, what do we see? And again, remember the 4-hour chart's the half-day chart. We see a crossover with both the derivative oscillator and the MACD in the morning on the 13th, and the market has continued to move up, slid sideways for a few days around the 14th through the 18th, and then shot up again. It's the market that keeps going, still well above the 2-day trend line. Now for our last index before we get to gold, we will go to QQQ. What is that? Well, that's the NASDAQ 100, and it is still up above the 2-day trend line. It was up 0.08% for the day, our lowest performing index. We have a red spinning top. What does that mean? Well, it means indecision, a predominantly down on our 2-day candle. However, still above the 2-day trend line. Derivative oscillators lost a lot of its energy. Looks like it's getting closer to actually turning over, moving down, but that hasn't happened yet. Still above the 2-day trend line. So we'll continue to call the NASDAQ 100 up. We have to. Those are our rules, and until you have a crossover, you are still in positive territory. What do we have going on the 4-hour chart? We saw during the morning it was up. In the afternoon it was up. What's calling that candle down was the down movement on the prior day. It was significant enough that the 2-day candle representing the 19th and the 20th was down based upon that down movement that happened on Monday the 19th. So we had up movement in the morning and in the afternoon on Tuesday the 20th. Again, the Qs was up 0.08%. Remember, our large chart is representing 2 days. The short chart is a quarter of that. It's the 4-hour or half-day chart. So that is where we are. Again, confirmed up moves on the large charts for all of the indexes. We did see the Qs crossover going down on the short chart on the 19th, but still above the 2-day trend line. That is where we are on our indexes. We're now going to go back to our 2-day chart and lastly take a look at gold. Gold was down for the day a little over 0.5%, 0.51%. It is currently down on the 2-day chart, although it's been sliding sideways up a little bit. It's above the 2-day trend line, but it's still in a down motion. Maybe it's getting close to crossing over. Hasn't done that yet on the 2-day chart. Derivative oscillators losing energy. The MACD does appear to be moving closer to the signal line. If we look at our daily movement, our half-day movement, what do we see? We saw a big bump up on the morning of the 19th, and then we've seen the market basically slide sideways. We do have a spinning top at the end of the day, which means indecision. We have the crossover on the 4-hour chart back on the 19th going up, and the derivative oscillators in the positive. So again, a little schizophrenia there in gold. We're waiting for gold to settle out. We're making no calls on that at all. It is still above the 2-day trend line, but the 2-day trend is down. So nothing for us to call there at all. We appreciate you being with us both today and every day. You want to find out what we do here at Charting Wealth? Join us every day. Go to our website. Take some of our training. Let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. Go to our website, Charting Wealth. Sign up for our daily newsletter. What will you get with that? You will get our How to Read a Stock Chart video, a link to that. Plus, you'll get from us the layout that we use at freestockcharts.com. Before you hit the link on the layout, first go to freestockcharts.com, sign up for a free account. Then when you hit the link we send you when you sign up for our newsletter, it'll actually pull up our chart so you can use it at Free Stock Charts. It's just that easy. Join us every day. You've got to practice this stuff. You have to spend just a few minutes every day figuring out what's going on in the market, and you will get better. You want to become a master. You want to get to Carnegie Hall. Practice. That's your direction. Thanks so much. We'd love to hear from you at chartingwealth.com.